Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very decent day in the markets today. And in today's action, the S&P and the Qs moving substantially lower and testing the infamous 200 daily EMA. Both the S&P and the QQQs bounced off the 200-day EMA. Is it just a short-lived bounce, and will we crack below to new levels, or will the bulls be able to muster a little bit of a rally from here and reclaim some key areas of price action structure and repair a lot of the damage that's been done over the past few weeks? So in today's video, guys, we're going to take a look at a few key things and spend a lot of time on the charts. Part number one of the video, we'll be going over some of the key news headlines from today. Headlines out of the Middle East, a big deal between the US and Japan, and a few tech headlines that I think would be interesting for our analysis. After we're done that, we're going to get into our index analysis, go through the S&P, the Qs, and other minor sectors, and get a sense of the market breadth right now. Is it still a good idea to be buying the dips, and how patient should we actually be? After we're done that, we're going to take a look at our big tech list right here. You can see that most of our big tech names were indeed down for the day. So once again, we will derive the best possible locations to acquire some shares for either long-term portfolio purposes or swing trading purposes as well. And at the very end of the video, of course, we'll go over the biggest gainers and losers of the day. There's always a bull market somewhere, and some of these names, especially the ones printing the highs, have just not cared at all about the recent action in the markets in terms of the bearish lean that the indexes have taken, and continue moving on and printing highs. Seems like every single day. So we'll take a look at some of these names, the hottest names in the market right now, and also some of the names that just can't keep it up, some names that have been coming perpetually down, and see if we can derive any entry opportunities therein. So it should be a very fun video this time around, spending a lot of time on the charts, especially surrounding the, or rather around the end of the video. So let's move into it right away, shall we? The S&P down about 0.25%, the Qs down 0.32 as the indexes remain exceptionally weak. It continues to be a stock picker's market. Only certain themes have been working so far to start off the year. And as a result, the heat map, once again, not looking the best. Although it wasn't as bad as earlier this morning, still, the market's largely ending down on the day. Big tech largely still out of favor as they continue to struggle to mount any significant price action improvements over the past few days and weeks. Semiconductors, a lot of them strong today. Semiconductor equipment manufacturers, some of the memory names after Micron's earnings yesterday, despite Micron being down itself, it did help lift a lot of the sector. NVIDIA, though, down, while AMD, surprisingly, and Broadcom were actually up. Financials continue to struggle as well. They are approaching oversold conditions, and there are many great deals here. However, the private credit headlines continue to keep this sector a bit weak. Healthcare as well, even though my big head is behind this sector all the time, continues to be a little bit soft as they are still in monthly consolidation phases. And the bottom half of the market, certain names that are inflation sensitive and interest rate sensitive as well, haven't been performing too well, such as consumer defensives, pulling back off of their earlier March and late February highs, and some of the industrial names that worked really well heading into this conflict and in the first few days of the conflict, such as some of your defense contractors, also down. The bigger defense contractors down a little bit, but some of the drone names are still very interesting, and we'll talk about them at the very end of the video. Energy continues to be the sector, obviously, that is outperforming because of the continuous impact of the price of the barrel of oil and concerns around the conflict in the Middle East. Moving on to the one-day relative, you can see that even better. Energy, our best performer of the day, followed very closely, well, not very closely at all, but in second place, technology actually managed to close green on the day. However, that is pretty much where the bullishness stopped. Everything else to the downside. Again, basic materials taking a big hit because gold and silver coming crashing down in a very large fashion. On the 1 week relative, only energy actually making it out of the market alive. All of your other major sectors, unfortunately, still down. As we currently stand right now, the fear and greed index at a very low 17 as your market momentum remains extremely weak. The index is substantially below their 125-day moving average, which this website uses for its analysis, but also coming dangerously close to the 200-day EMA as well. Net new 52-week highs and lows on the New York Stock Exchange also in extreme fear territory, and your stock price breadth has just been collapsing over the better part of the past week. A lot of conditions in the market here do show extreme fear and coming into oversold conditions. So we know it's a good buying opportunity, but we also know to be patient and very tactical in terms of the names that we're choosing to buy. Put to call ratio still in extreme fear territory as people are continuously buying insurance hand over fist. So before we get into more technical analysis, guys, let's go over the best news elements of the day here. I'm going to start it off with this one. Starting off with number one, French President Macron saying we will not take part in any forced opening of the Strait of Hormuz. Now, he did join other G7 leaders today, publishing several statements to the fact that they do condemn the attacks that Iran has done across the Middle East. However, not willing to take actually any action militarily to resolve it. Now, the French were sending naval vessels around the Strait of Hormuz, but President Macron saying they will not enforce any military action within the Strait of Hormuz. So that was slightly disappointing, especially if we are counting on military naval escorts to reopen the strait. Number two here, ships passing through the Strait of Hormuz. While we're on the topic, you can see the massive collapse, and it hasn't been getting better over the past 2 weeks of time. As a matter of fact, today, no ships actually making their way through the Strait of Hormuz as the pressures continue to mount in the Middle East, and the impacts of the prices of the barrel of oil have been impacting not only the United States, but Europe and Asia in a heavy fashion. Moving on further here, Iran's attack on Qatar yesterday has allegedly damaged facilities that produce about 17% of its liquefied natural gas export capacity, and repairs will take 3 to 5 years. This attack cost them $20 billion. They built this facility a few years ago for $26 billion. So suffering a lot of damage in the process and saying it will take up to 3 to 5 years to recapture a lot of the manufacturing capacity that they have lost. Now, this joins attacks that were made on Saudi Arabia, other nations such as Oman, Kuwait as well. So a lot of Middle Eastern nations are being heavily pressured here in terms of their oil output, but also in terms of their LNG outputs too. Moving on a little bit further here, you can see 3 distinct oil markets between Asia, Europe, and the US. WTI, as we stand right now, oil, at least American graded oil, coming down about $94 per barrel right now, but that's not the same. The United States has not been the one suffering the most. No, largely those are Asian markets. Look at the prices of the barrel, but the disconnect here between WTI and the highest one up here, which is Oman. Oman crude up here at about $167 per barrel. Dubai at $136 per barrel. Europe, which is Brent, also well above the $100 mark. As a matter of fact, the WTI print is actually performing the best out of all of them. This disconnect is something that we will have to closely monitor. Usually they do trade relatively tight, but just to say, the energy crisis is probably not going to come mostly towards the United States, although it will have inflation here. The impacts will be felt more globally, so keep that in mind. Moving on a little bit further here, taking a look at the WTI futures prices, you can see we still remain tight here as traders largely pricing in the everlasting impacts of this war. Even if you were to end the war tomorrow, you'll see that a lot of these contracts, right, very tight. So even if the price of WTI does come down, we can expect the price of the barrel of oil to remain somewhat sticky for a longer duration in time, which will add to the pressures which were described by Jerome Powell yesterday that we recapped in the video with the Fed's summary of economic projections, where they did see higher PCE inflation for a good portion of 2026, more likely in the forward months, right? The next 2-3 months type of thing, but that GDP unemployment would still be strong. However, this inflation print is really the thing that's holding them back from cutting interest rates. The market's still pricing in only one interest rate cut for the entire year. Now, changing gears a little bit, we did have some good news. This one, Japan pledging $73 billion in U.S. investments after the Prime Minister met with President Trump in the White House today. A very big conference between them, and this is part of the massive $550 billion spending commitment that Japan made earlier last year. Now we're getting some small details to start it off. The latest batch of investments will see Japan spend $40 billion on the construction of small modular nuclear reactors by GE Vernova, Hitachi in Tennessee and Alabama, and $17 billion on natural gas generation facilities in Pennsylvania, and $16 billion on natural gas generation facilities in Texas. That's why I've been putting so much emphasis, guys, on the energy trade, not only during the time of the war, but also previously. You might remember I've been putting a lot of emphasis on the themes for the markets over the next 2, 3, 4, 5 years. And a big one is the energy bottleneck, especially, of course, for the data centers, nuclear and renewables, specifically something to pay attention to. But also, we did spend a decent amount of time describing how some of the best plays possibly may just still be LNG, right? LNG and then everything that comes thereafter, right? So Bloom Energy for their fuel cell conversion technology, GE Vernova, which uses large turbines to convert that natural gas into electricity generation for the data centers. So that theme around energy generation within the US not only because of the war, this one's going to be very popular for the ever-growing energy demands within the United States. And this news headline right here just reiterates those facts. Many heavy investments by Japan into that niche directly. Moving on a bit further here, Meta plans to cut back on third-party content moderators over the next few years as it expands use of AI tools it says are better at spotting scams, celebrity impersonators, and some other rule-breaking content. Meta still plans to keep human reviewers for appeals and higher risk decisions. More quote-unquote efficiency gains from AI. So every time that we start seeing some efficiency gains from AI, I will keep you guys posted, but this also has the duality of things, right? Cutting jobs because of the AI benefits right now. So these are things that we got to pay close attention to. Moving on a little bit further here, Wall Street Journal reporting that Jeff Bezos is in early talks to raise a $100 billion fund to buy manufacturing companies and use AI to automate them faster. The fund is set to target sectors like chip making, defense, and aerospace. And nobody knows how to do this better, arguably, than good old Jeff Bezos, right? Amazon right now is one of the de facto largest robotics companies in the world. Now, they do not sell their robots to other third parties. However, if you guys have ever seen an Amazon warehouse in action, you'll notice that it's largely 90% automated with robots on the floor, sorting packages and other things of that nature. This time, Jeff Bezos willing to apply that expertise into various industries, chip making, defense, and aerospace. So once again, robotics is going to be something very big to pay attention to, guys. We've been putting a lot of emphasis on that theme over the course of, well, the tail end of last year into early this year as well. So those are some of your very big news headlines that struck the markets today. One last one that I had to give you guys would be this one right here. There was a reason why the S&P came up in the very late hours of the afternoon, and it had to do with this right here. We had some news out of Israel from Prime Minister Netanyahu. So I'll just move myself over and we'll take it news headline by news headline. Netanyahu says that Iran no longer has the capacity to make ballistic missiles and that Israel is helping the U.S. open the Strait of Hormuz. We know that Iran still has ballistic missiles and drones, however, this time saying that they're no longer able to produce them in the future. So we'll just have to see how quickly Iran is going to deplete their arsenal. Netanyahu also saying we can't do a revolution from the air. There needs to be a ground component as well, saying there are many possibilities for a ground component, but I won't share what they are. President Trump, during his conference with Japan, was also asked about this, whether he would put troops on the ground, and he was quoted in saying, if I did, I have no plans for it now, but if I did, I probably wouldn't tell you. So let's see what happens with that. Israel's prime minister as well saying the war will end way faster than most people think, which is also what Trump says every single day at this point in time. And then also reiterating that Israel acted alone on South Pars. Trump asked U.S. to hold off on future such attacks, referencing Israel's attack yesterday on the gas fields in Iran, right? Which is something that you wanted to really avoid. That's what led to Iran's big retaliation strike yesterday and is indeed what led to a lot of the market declines yesterday and very early this morning as well, before traders bought the dips after some of these news headlines that came out of Israel's prime minister's speech. So a very volatile day in the markets once again, guys, and you can see the futures are somewhat mixed, coming right around the 200-day EMA. Those are news headlines for the day. Let's get into some charts and drive what's going on with the price action and what we could possibly expect as well. So moving on first, of course, as we always do, into the S&P. Daily downtrend is still very much underway. No oversold conditions just yet. Usually, if you want to find some sort of a liquidation break or a capitulation break, you really want to see oversold conditions. And unfortunately, we don't have them yet. This is a very key component of structure, the 200-day EMA. Support right now remains at 660 down to about 653, and deriving whether or not we get a very big bounce from here or continue to flush the lows, guys, is very hard right now because we know it's a very headline-driven market. One thing is for sure with the 200-day EMA, guys, okay? Either it gets significantly worse, or if the markets start to bounce, that's usually when they stop. You see, when we come close to it, right, it depends on the situation all the time. You'll find many instances in prior history where it can bounce and reject from there, but it does entail that the markets are otherwise doing well and that the narratives are somewhat superficial. The narratives in the market right now are not very superficial in nature. The war is, as a matter of fact, very real, and it's tough to kind of end the war on a dime right now. So I'm going to be waiting to find more confirmations from the price action, right? As of right now, we are battling with it. If you want to see the bulls back in control so that we can kind of lay on the long-based swing trades, you have to see the price action be repaired a little bit. This price action is very weak right now. So in order to determine if the bulls are back in control, you need to see a big reaction. The next few days are crucial for the S&P and the QQQs, in my opinion here, guys. It's very crucial right now. No, we're not daily oversold, but from here, okay, you want to see a very large bounce, an engulfing move arguably, and a change in the daily uptrend. That's what gives you the indication that we can play off of these 200 daily moving averages. Just buying the markets at the 200 daily moving average is not a strategy, guys. It's very speculative. We have to wait for price action to be repaired a little bit and give us the daily uptrends. Then we can layer on a bit more size. As of right now, we are still in the context of weekly downtrends and in the context of monthly consolidation at the 200-day EMA, at the monthly 12 as well. So for now, for me at least, it's just basically a wait and see environment, right? So holding back some of the buying power, still playing the wheel strategy, selling put options under the market when you get big volatile days, big red days. But to layer on further longs, we need to see a little bit more price action repair here on the index level and showing us that the markets want to re-expand the market breadth, because as of right now, it is still very weak. Percentage of stocks above their 20-day EMA still at a very low print of 25. So we know for the long-term portfolios, it is very easy to buy down here. However, we do have to be somewhat tactical and patient as we buy and DCA into it with our paychecks. If we're trading, even though we know market breadth is weak, the VIX is very high, and we have several conditions that do show oversold, such as the market breadth right now, percent of stocks above their 50-day EMA at 28%, also a very low read in the grand scheme of things, percent of stocks above their 200-day EMA under 50%, which is also very, very, very weak. It can get a little bit softer, right? What you want to see is a culmination of many different things. If the S&P shoots us down into oversold conditions and flushes this 200-day EMA, and we get daily oversold conditions, then we can possibly play some big oversold bounces. As of right now, we're just kind of grinding lower on the price as we continue to battle with all of the narratives at the same time, right? Especially the Iran situation, the private credit situation, yesterday's comments by the Fed, the soft jobs data, right? And also the AI, continuous pain in the AI trade, depending on which sectors you're looking at, of course. Energy, robotics, and semiconductors are very powerful right now, but big tech, you need big tech in this market. And so far, they just have not been able to contribute to many gains across the board, right? We know that we have long-term bullish tailwinds, and the moral of the story from yesterday's video, guys, is that we have to kind of be in the same environment that the Fed has been quoting to us, right? In the very short term, we need to be cautiously optimistic. We know that we're fighting many bearish narratives and war news headlines on a daily basis. We can be bullish for the long-term outlook, meaning that leaps and longer term shares are favorable right now, but any short duration swing trades, we have to be very careful and play uptrends. Some of the themes of the market that we'll talk about later on in today's video, right? Some charts that look very well. As of right now, if you're just trying to catch, falling knives or stocks that are not benefiting from many uptrends right now, it's not going to be very easy, is it? Moving on to the QQQs right now. Qs also rejecting from the 200-day EMA. Almost losing a key area of support right now, guys. 596 down to about 589 is the line in the sand level. You can see the bulls tried to bounce from here, but you undercut many areas of price. That 593 low was a very big level. We are now below that. And if you lose more structure, guys, you're very rapidly heading down into here, 581 down to 575, which were the previous lows of November. 200-day EMA is absolutely crucial right now. The weekly right now in a downtrend. The monthly also consolidating very close to the 12 EMA. We are still in a form of monthly consolidation. And until you get more momentum on big tech and or software, because those are the ones that have really been bringing us lower, it's going to be very tough, right, to repair some of the action on the indexes. Daily downtrend now started by the bears. They're in full control of the daily, full control of the weekly as well. So if we want to layer on more size and try and make some attempts at some swing trade lows, now may not be the best way to do it. You would rather just wait and see if they're able to reclaim, get the daily uptrends, then we can easily place some stop losses below these current levels. If you're just buying long from here, right, wishing you the best of luck, but it is very speculative in nature because you don't have the price action. All you have is the 200-day EMA. And sometimes trading is not like real estate. It's not only location, location, location. It is how you pull down into the location that matters a lot more. And right now, the price action is just a little bit too choppy for a lot of people's likings, including myself. Moving on to XLF financials today. Financials closing green, but still daily downtrend remains, right? So right now we're kind of in the middle of nowhere. Below support is currently 48 down to about 46.50. So keep that in mind. The bears are still well in control of this weekly downtrend as well. Bouncing out of oversold conditions, a little bit of bullish divergence right here, lower lows on the price, higher highs on the RSI. So as we move into more of this divergence and oversold conditions on this ETF, plus confluence of a nice support level, you can drive the fact that the bulls are looking to kind of slow down the action until we come down into here, right? If you want to see some big gains, guys, or position more heavily into any financial swing trades, trying to counter the private credit narrative, you got to wait for the bulls to recapture price action control. And that's what we're going to focus on today's video, right? Give me the daily uptrend, then we can layer on trades with a bit more size. As of right now, it is just wishful thinking, and the bears are in short-term control of our action. So the only way to play this, in my opinion, is selling put options onto the market if you want to play this or many other names in financials that have been just perpetually coming down to lows, such as Visa, such as MasterCard, such as American Express, such as JP Morgan, such as Bank of America, right? We can try our hand at selling put options far below, especially when we're in daily oversold conditions. But for long directional trades, you would like to wait for a bit of price action to come back to the bullish side. Moving on to healthcare right now. Healthcare down 0.36%. The bears in full short-term control of this one as well, rejecting from a resistance range earlier this week, 153.50 down to about 151.50. So below the 200-day EMA on the XLV healthcare sector as well. And it's just too hot. We're coming down. I like this level, right? We were always looking for the cup and handle back test of this good old, call it 148 down about 145 location, but it's coming down way too hot, right? You would like to see them kind of just come down slowly into here and get a nice price action gain from the bulls. It's not what's happening. We are oversold. We're oversold in a lot of sectors right now, right? XLF is oscillating between oversold and not. XLV is oversold. But that being said, right, I am going to be patient and wait for the price action to tell me where the true lows are possibly going to be. As of right now, not playing healthcare, but I'm interested in this location. It's like they're in this location. They have me interested. Now I'm waiting for confirmation to confirm the level and confirm the bull's ability to want to buy this dip and put a stop to the price action to the downside. Semiconductors not looking too bad today. Very nice bounce off the lows, but price action is a little bit distorted right now. We will see who's able to establish control. If you want the bulls to come back in control, got to give me a break above 404. We know that this sector has been very mixed. Names like NVIDIA not doing anything. Names like Broadcom, some of your market, the biggest market weights in this ETF, right? Not doing much of anything. But some names are holding up better than others. ASML still holding very close to the highs. TSM still holding relatively close to the highs as well. Some of your other names such as LRCX, right? The equipment manufacturers, this one, AMAT holding close to the highs. Micron, SanDisk obviously holding very close to the highs or pushing new all-time highs in SanDisk's case, right? So the index is fairly mixed. There are still some very interesting players that I'm very interested in building positions in or playing the wheel on, such as Broadcom, such as AMD, since it's been relatively weak, such as NVIDIA, obviously, right? And also a name like Marvell. Okay, so those are the ones that have come down in a decent fashion here from their most recent swings, and I will be interested in playing those. However, if you're looking for momentum, obviously, we have to play different names. We'll talk about that at the end of the video, just to say that semiconductors right now are not all built equal. But that being said, there is enough market strength in this ETF to keep us relatively bullish right now. We are still in a phase of weekly consolidation, right around this 12 EMA. The monthly still a little bit extended. So semiconductors is kind of like a pick and choose ETF right now, right? Either you're buying names that are very high quality, but who have been kept artificially low recently, or you're playing heavy momentum in the memory names or things of that nature. We'll talk about more about semiconductors at the end of the video and how to best position in each different segment of that market. Moving on to the IWM Russell right now, small caps not performing the best, right? But we know that this IWM Russell is a very mixed bag of things, right? There's a lot of financials, a lot of industrials in the IWM, and those two categories haven't been doing too well. There's also a lot of healthcare in here too, right? The Russell, oftentimes people think that it's just a bunch of unprofitable tech companies. It's not the case, right? If you look at the IWM sector weightings right now, if I can find it, give me a sec. You see right here, industrials 19.6%, financials 19, healthcare 16, consumer discretionary 11.5. As a matter of fact, tech is underweighted compared to these sectors. And these four elements right here have not been doing too well, which is why the IWM, broadly speaking, has been down. You might remember that I was saying since the beginning of the year, I'm not playing the Russell directly. Okay, I'm playing individual thematic names that we will cover at the end of the video. Again, you guys probably know a lot of them, right? That being said, the Russell, very soft right now. Weekly, downtrend, and monthly consolidation. Next stop down here, 240 down about 235. Touch of the 12 EMA and back testing your prior all-time highs. And that is pretty much it for our sector rundown. I mean, we can do a little more, I guess. XLP, consumer defensives, right? Not doing too well at all. Big daily downtrend here. Lots of momentum coming into oversold territory. So you're noticing a common theme here. XLF, oversold. XLV, oversold. XLP, oversold as well. And many sectors remain oversold despite tech not being oversold just yet, right? So that's why the market breadth is down. Seeing many sectors pull back in a very violent fashion. They're unwinding a lot of this move that started off earlier this year. The logical reason being these companies don't have much pricing power, and they are more affected than others and sensitive to interest rates and inflation as well. So I'm not playing consumer staples right now, at least, right? I'm playing other sectors, but there will be a time to play this again. We're going to have to wait for better price action. They're currently flushing through support levels as if they're not even there. And that's a pretty big level, right? So I need to see the bulls reclaim a little bit of bullishness in terms of price action, reset the trends, and then maybe we can play them again. But so far, unfortunately, this at the current time, if the month of March closes like this in about 2 weeks, right? Failed breakout attempt. But unfortunately, the war situation has been the biggest contributor to this one right now. Consumer retail also relatively soft. So this is just a bunch of, various retailers, right? Whether restaurant brands or apparel brands, obviously subject to inflation and consumer spending concerns right now. Weekly downtrend has unwound almost all of the move. Huge support coming into here right now, right? So that's the whole 79 down to 73. Many people use XLY. I'm not a fan of using XLY because this one is too heavy in Tesla and Amazon to be representative of the broader consumer retail trade, but I'm not really playing consumer discretionary right now, right? I'm not playing the restaurants like Chipotle or Kava or other things of that nature, or CLH, right? A lot of popular names. I'm not playing those. I'm also not playing some of the apparel brands like Nike or Lululemon or Decker's outdoor brands. Not that you can't possibly find some alpha here. It's just the entire sector is out of favor. The narrative is against them. So if I'm looking to play momentum, I'm playing different sectors than this one. There will be a time to play consumer discretionary, but I don't believe the time is right now, despite the fact this sector was actually higher on the day. Also in oversold conditions. Utilities coming down a little bit. This is a sector that I like a lot. I'm not playing the actual ETF, but I am playing individual components. As you guys know, Next Era Energy, strong. Vistra, also a very strong pick too. We can look at other ones such as Duke Energy, which has been breaking out recently too. Obviously, you have Constellation Energy too, which could be a very interesting pick, but utilities, pay attention to utilities, guys, especially the independent power producers. Going to be a very strong sector here, not just for the week, not just for the quarter, but arguably for the next few years as we just focus more on energy production within the United States. Looking very strong here for a breakout of the previous all-time highs, just holding level right now, possibly looking to go for a bit more. So utilities remains one of the sectors that's been holding up their gains. Real estate, disaster as of recently, right? Whether it's the home builders or some of the mortgage companies. And the simple reason is the interest rates, right? Interest rates don't come down, guys. The real estate segment of the market is just not going to do too well. It was doing really well here to start off the year when we were before the war, and the market was pricing in 2 to 3 interest rate cuts this year. Unfortunately, this trade now has to be paused, right? So I would be willing to nibble a little bit of Rocket Mortgage down here and things of that nature, but you're going to have to be a little bit more patient if you're playing the entire real estate market. And last but not least, energy. This one, big weekly overbought conditions right now, but the bulls are very strong and in full control. The only risk that you have to this sector is if somehow over the next few days and weeks, President Trump declares victory in the Middle East, right? Even though the goals may not have been accomplished, such as regime change or securing the enriched uranium, that's the risk, right? If ever there's a Band-Aid ripoff of the war in the Middle East and we just pull out, well, these names will probably have a very big pullback. So if you are trading these, trade them with a stop loss, and you want to be targeting your most recent daily higher lows, or at least swing trading them as such, right? Level to level swing trades. Just don't get overly greedy with these names. I know they've been performing really well, but you are also, similar as the rest of the market is at headline risk. For more negative war headlines, if you get any positive war headlines, you could see some significant pullbacks on this ETF very rapidly. So play these still with a bit of caution. That is definitely where a lot of the momentum has been had, at least recently. Moving on to the VIX. The VIX actually hit a high of 27.5 today and then pulled back. So in my opinion, guys, we may not get the black swan event that really pushes the VIX above 35 again, but you may just be in a high VIX environment for the foreseeable future until there's resolution of the conflict, meaning you may just stay relatively sticky here between 30 and 20, which means it's still a great environment to be selling options, covered calls on big winning positions, very juicy premiums, and selling puts below the market on your favorite names on big red days. So keep that in mind, right? And if you are trying to buy call options or things of that nature, you're paying a lot in volatility premium. So try and use spreads, right? Whether you're hedging the markets right now to the downside or whether you're buying longs to the upside on your favorite things, the use of call debit spreads or put debit spreads is a great way to mitigate the impacts of some of this immediate volatility. Moving on a little bit further here, guys, we'll talk about gold and silver. Gold and silver, guys, breaking down a very big way. That's why we're saying got to keep a stop loss right here, 48.50, because if they choose to go for the big unwind, we were kind of calling this as it was happening, right? In terms of if you lose this key area of structure, you lose the EMA support levels, it's not going to look the best. And if you lose this weekly 12 EMA, it's a regime change in terms of price action. The bulls haven't lost this, guys, right? You got to pay attention to this stuff. You haven't lost it since November of 2024. It's been a very long time. The price has been respecting the exact same weekly 12 EMA, right? As the moment in time where that changes and you start getting the EMA crosses like this, suffice to say, guys, this time is indeed different, and you may just be heading towards a larger phase of monthly consolidation. So if the consolidation continues, the easiest level to base some trades off of would be around the 4,200 location. If you do come down here, that would be the 200-day EMA on gold. And similar to other names on this list, right? Gold is no different. You have to wait for price action structure to become more favorable. We wait for the daily uptrends, wait for the market to show you where the bottom actually is. Yes, we're coming into a secondary level of price action support right here, right? Which you can clearly see from some of these liquidation break lows and some of the previous highs, et cetera, et cetera, et cetera. However, you got to wait, right? Just because there's support there, it's not real estate. Just because there's support, we just position blindly, right? No. If you get daily oversold conditions, we're very close. It's been a long time gold's hit daily oversold conditions. A very long time, since 2023, right? And you're looking for resumption of a new daily uptrend, something like this. And then thereafter, we can position with a stop loss and go for the trend continuation, right? But you got to wait for the price action to be repaired right now. As of right now, the bears in full short-term control. So I am a big fan of being willing to play gold in the future. I'm just being a bit more patient to find the daily uptrends, and silver is the exact same thing, falling off a cliff right now, respecting our support 75 down to about 71. No closes below, but the price action right now, very soft. Daily downtrend and also weekly unwinding here quite rapidly. So we will see how it closes. But, you know, silver as well. We hadn't closed a weekly below this weekly 12 EMA in a very long time, guys. Since March of 2025, it's been a year that they've respected this 12 EMA the entire time. Now, this time is slightly different, right? We're well below the daily moving averages. You are not daily oversold conditions just yet, so we have to wait. The focus will be on gold, because if you don't turn around gold, you're definitely not going to turn around silver. So if we're looking at position on silver, I'll be waiting for some better price action on gold. And then silver is just like the more volatile bet as a result of that price action. So please keep that in mind. Moving on to oil right now. Oil not doing too much, still holding very close to the highs. Obviously beholden to the headlines on a daily basis. If you have some breakdowns below here, right? Daily downtrend and weekly consolidation, the bears will probably be looking to set a high, well, the bulls, I mean, you know, if you're bearish on the conflict or whatnot, right? The bulls in oil will be looking to set some weekly higher lows and possibly go for a little bit more. The closest area of price action that you would have is this little intermediary area right here, 90 to about $85. So pay attention to that, how we react from it in that level. As of right now, the bulls just holding very firm right now. So keep that in mind. So oil, obviously, very tough to derive which way this one's going to go. There's a lot of people trying to short this one, but obviously as the conflict rages on, it just puts more pressure and keeps the barrel extended for a long period of time. I'm not playing oil directly, but best of luck to you guys in the event that you are. Moving on to Bitcoin and crypto right now. Crypto continuing to be very soft right now. So unfortunately, another set of failed breakouts for Bitcoin. They tried their best to break above, but unfortunately the market dynamics right now just a bit too strong to the downside. Crypto not being favored, and the money flows into crypto, I assume, are a lot weaker than other segments of the market. We're just not able to get any lift out of this area, guys. So still trapped between 74,000 and 66,000, which is a big area of support, but unfortunately the bounce size was just too soft, right? So there is still some swing trade longs in here, but you do have to be trading with the stop loss 65,800, because you do not want to be unwound, guys. If they just go for lower high, lower low attempt down here into 60 to 55, keep that in mind. Ethereum, same concept as well, right? Ethereum looking decent there for the breakout. However, you got to trade with a stop loss 1925. If that's invalidated, that is just another weekly lower high, and unfortunately, you're going a bit lower, so try not to get unwound. I'm not playing any crypto swing trades right now. These markets are just a little bit too weak for my liking. I'd rather play, if I'm playing any swing trades right now, I'm not playing counter trend, meaning I'm not playing in the face of big weekly downtrends and heavy longer term time frame negative momentum. No, I'll be playing some of the names and sectors that we talk about at the end of the video that are displaying positive momentum and big money flows. So please keep that in mind. Now, moving into our big tech list. So moving into Apple right now. So Apple, a little bit soft today as well. The bears still remain in control. We are now below the 200 daily moving average, still in the confines of support, 256 down to 246. However, we know daily bears in full control, weekly bears in full control of this market as well, and monthly consolidation. So my favorite way of playing Apple right now, selling put options well below the market down here into the 230 range. If you do come down there over the next week or so, you will be daily oversold off of Apple into a very crucial key area of big support price action. So that's the way that I'll be playing Apple moving forward. No swing trade longs for me at this point in time. For that, you would need to have some price action be repaired here in terms of setting new daily uptrends. As of right now, just a bit too much momentum to the downside. Moving on to AMD, AMD with a 3% day. However, we know that price action is still largely very choppy. If you want to see the bulls back in control, break of 209 to the upside gets you a nice new daily uptrend, and then we'll be attacking resistance 215 to about 229. If they continue to give us very choppy price action and break down below again, you will find me selling put options down here in the lower 170s, which would be the full OpenAI gap fill right there. So although price action is very choppy, long-term opportunities for AMD, I'm still a very big fan. I'm still holding my leaps, still holding my shares, because we're looking for the expansion of the long-term thesis. It's just been a little bit slow recently, right? So very key area of support right here, 190 down to about 179. In around these areas, AMD is still a very good deal if you are an investor in the long-term thesis of the business. Moving on to Amazon right now. Amazon trying its best to hold up above the 200 range, right? However, price action is slightly mixed. Daily downtrend right now, and as a result, the weekly just a little bit too soft, right? So that point, the weekly bears are in control, lower highs are set. You want to see the bulls re-expand, and for that, you need a break above 219 if you want to see very bullish price action and a reclaim of this big area. Right now, we're just being a little bit mixed within the area of support. It's a big battle going on right now. One thing's for sure, if Amazon breaks down lower, you will find me selling put options down here in the lower 190 range and also further accumulating my shares in this fantastic company as we are into a big monthly phase of consolidation. Amazon still off its highs at about 20%. So longer term things like 2-year leaps and longer term shares, I am still a big fan of, but short term, it's very tough to swing trade this one long from here, level to level, without the bulls giving you any indication that they want to participate higher, and without your indexes showing a bit more strength overall because of this conflict. Moving on to Google right now, Google trying its best to hold on to this $300 area of psychological support, but that's all there is here. That's why I put a yellow line right here. I mean, I could put a box here if you really want to, but let's be honest, right? It's not the strongest area at all. If you zoom out to the weekly, there's barely anything here, right? They've tested it a few different times, but overall, look where we are in terms of the monthly as well, right? You're almost in the middle of nowhere. The 12-month EMA is curling up as fast as it can, but still, very fragile area for Google right now. So I'm not taking any trades right now. If you were to take any swing trades long to go for Google's expansion out of this area, there's a clear stop loss location down here, guys, and it's about 295. You break down 295, it's very easy for the bears to come and test this. I'm pretty sure you guys understand there's the market environment right now is such that you can easily pull back to monthly EMAs if the entire sector is not favored. And for the most part, big tech has been out of favor now for a very long time. So Google holding up better than most. That is a swing trade opportunity, the only one that I see. If I'm to participate in a more heavy fashion, I would like to see a retest down here of 275, which would put Google 20% plus off the highs. Back test of the 12 EMA, and I'll be waiting. If you get the big flush down here into possibly close to oversold conditions, and then we get a nice daily uptrend shift, then I can layer on a bit more size. But up here, it's just too much of an interim level for me. And I'm also not adding to any long-term shares around 300. Not that the valuation isn't good. It's just not one of my favorite valuations in the market right now. This next company, though, is Meta, down about 1.5% today. Price action extremely weak. The bears remain in full control of this daily downtrend. Rejection from resistance, 650 down about 630. They held it for a while. Bears just too strong right now. 605 down about 550. It's a very big level, guys. This is a very big level, right? So Meta will probably get a lot of support down here. Not quite daily oversold conditions just yet. So any swing trade longs right now, guys, I mean, it's counter trend. So the way that I'm playing Meta, long-term accumulation and selling put options far below the market because there's good value down here. If I get assigned some shares, I don't mind, right? Because we're trading super cheap. We're trading almost at this point in time under a 24 price to earnings and a 1 peg. So Meta, still one of my favorite longer-term buys in the market, but you will need to be patient, guys. All of the Mag 7 just not having it in the markets right now. Moving on to Microsoft, same concept. Nobody's debating the fact that Microsoft is cheap right now. At 390, it's a 24 price to earnings and a 1.3 peg. Very cheap valuation for this company. However, the price action is incredibly weak. We are once again falling. The bears now back in control, daily downtrend, and we are dangerously close to losing the 200 weekly EMA, which Microsoft, let's be honest, right, hasn't lost it by much at any point in time over the last 15 years. The last time was in the bear market of 2022. Microsoft deeply unfavorable right now in terms of sentiment, in terms of price action. Nothing has fundamentally changed with the company. It's just nobody is bidding, right? Back in a weekly oversold conditions as well. My favorite way of playing this one, long-term. Long-term shares will obviously be rewarded. At the end of the day, it is Microsoft, but this one is now approximately 30% from its highs. The next stop, if you do breach below, you're going down here to 360, 350 is the next key area. That would be the most significant breach and drawdown beyond the 200 weekly EMA in 15 years. So it's a historic moment in time for Microsoft right now, which is I'm a fan of buying longer dated things, right? Longer dated leaps, 2 years of time, or long-term shares, right? But in terms of short-term swing trades, price action is just not very favorable for that right now. The bulls are just not able to get it done, right? Very, very weak bounce, super weak bounce. So follow through can be anticipated. Moving on to Netflix right now. Netflix down 3%. Daily downtrend is underway, which just means that we're into a bit of a weekly consolidation phase. Now, the bounce size on Netflix after the Warner Brothers deal was dropped. Well, the bounce size was very good, right? You had like a 70% bounce. So the bulls have a lot of space right here to repair the short-term price action. However, with how weak the markets have been overall in relation to large cap tech, you can even expect them to do a little bit of a gap fill down here. Gap fill would be like around the 86, 87 level. If we come down there, I'll be trying to sell my puts below here, just trying to protect these areas. The bulls have a very good chance, right? And trying to reset the weekly uptrends like this. That is the type of move that I'm looking for on Netflix. And also below 90 towards the 80 level, that's where I'm also buying more shares as the valuation is quite fair in relation to past history. Moving on to NVIDIA right now. NVIDIA down 1%. They were down over 2% at one point today, but still struggling, right? NVIDIA is just going nowhere, right? The price action, very choppy. My favorite way of playing this one, once again, you drop down, test this 200 EMA with some big volatility like we saw today. Selling put options well below the market for 0.5% per week. I am a big fan. NVIDIA's valuation, especially after their guidance raise, is very fair. 21 forward price to earnings, under a 1 peg, and very beautiful support down there. So if you test this area of support, I mean, I've showed it to you guys on the top 5 options videos in the past few weeks, right? You pull in these areas with the VIX and how high it is, we can find some short puts below 160, like in the mid 150s range. It's a very nice area to be playing this one. The other way that I'm playing it, accumulation of long-term shares. And when we pull down into here, I may just add to my leap position as well. Moving on to Tesla right now. Tesla breaking down, stop loss area has been triggered at this point. Daily downtrend, weekly as well. Continuation of this weekly downtrend on Tesla, and your monthly consolidation continues. Mag 7 continuously out of favor, guys. The market is just not bidding them right now. Large cap growth remains out of favor. Your next stop for Tesla, 360 down to 340. If you want to see some the bulls come alive, right, you got to put in a stance like right now, meaning tomorrow. You got to reclaim this area, give me a nice engulfing move, and reset the daily action. Then we can take some swing trades with another stop loss below these lows. But if you've already made the attempt, trying to go for the breakout, this is the stop loss area. The last thing you want to do is be unwound all the way through there and hold that drawdown, right? So Tesla still out of favor. Palantir, not too bad. 2% to the upside. Palantir is actually one. The price action looks very decent on this, right? Nice daily uptrend. The bulls are trying to set the higher lows right now and trying to go for the re-expansion. Holding the EMAs and holding above support 147 down to 140. This one is decent for some possible upside right now. The bulls not looking too bad on the weekly as well. Very nice bounce size. We'll see if they can get any follow through here and push into the higher 170 to 190. It's being favored right now because it is part of the military complex. So keep that in mind. Palantir, out of all the names that I've shown so far in this list, Palantir has some of the best price action right now, okay, in this entire list so far. If we're looking for any swing trade longs, it's very easy, guys, to place a stop loss on Palantir right now and go for that re-expansion. We can keep a very tight stop loss, or we can keep a stop loss that's a bit more wide below the key area of structure support and go for the longer version of the expansion trade into the higher levels. So Palantir is expensive, but the price action is good. Moving on to SOFI right now, this is not good price action at all, right? Continuous daily downtrend. Yes, oversold conditions. Yes, more lower lows, but we're getting some form of higher lows. So still bullish divergence right now, but it does not matter. SOFI is just being lumped up with the financials trade. Weekly RSI is very low right now. Crucial area of support, 17 out of 14. Nice area to be selling some puts into or acquiring some more shares if you are a long-term SOFI bull. But any short-term swing trades, guys, I would much rather see, we don't even have the 12 EMA. The price action and momentum is clearly in full control by the bears right now. What you want to see, give me a daily uptrend. We haven't had a daily uptrend, guys, since back here in December, right? So if you want to see any swing trade longs from me, at least, give me a daily uptrend. Give me a clear stop loss level to take advantage of that price action on, and then we can kind of layer on the size. As of right now, my favorite way of playing this one, short puts onto the market or slowly nibbling if I'm looking to build a position further on SOFI, which I'm not. I bought most of my SOFI shares last year around the $11 range during tariffs, so I'm good, but those are the conditions you'd be looking for. Moving on to Uber right now. Uber also selling off most of the post-NVIDIA gains as Uber still remains out of favor as part of the large cap cohort. So we'll see. Still in the context of a daily uptrend, higher lows are here, 72.65. And on the weekly, guys, the weekly bears are still in full control of this chart, right? Lower highs trying to be attempted by those bears right now. Pay attention to it. If you get a breakdown here on Uber, similar to a lot of other names, my favorite way of playing this one, selling put options down below here. I'm being patient and or accumulating shares for the long-term portfolio. Uber is now in a location between 75 and the low 60s that I am finally buying the dip on Uber again. I held off this entire time because I was full. Most of my Uber position was built under $60 a long time ago. So it takes me, if I'm going to DCA up, I have to be sure that I'm getting a good valuation. And at 75 or below, valuation is quite fair, low 20s multiple, and a 1.1 peg. And last but not least, Taiwan Semi holding up as best as they can, right? Short-term price action in control of the bears right now. We'll see if the bulls can get it done and change this up a little bit. As of right now, though, consolidation phase on the weekly time frame as well. And if this extends a little bit lower with other semiconductors, right? Although it's a very solid company, we haven't backtested this 12 EMA on the monthly in a very long time. So I'll be looking for a bit more consolidation. My sweet spot, 315 out of 310. I'll be interested to position down there. Okay, if ever the bulls choose to take a little bit of a breather right down there, I'd be very interested in playing this one coming down into that level. At 340 right now where we stand, is the valuation fair? Yes, it is. So it's not as if this stock is super expensive and we're expecting a massive re-rating to the downside. So please keep that in mind. That is the overall view of the markets. Hopefully you guys enjoyed. I went through it a bit quickly, I know, but we've been spending extended periods of time on a lot of this stuff recently. So hopefully you guys, now you know what are the implications of the price action on the indexes right now. We are really teetering on the edge. So as I was saying yesterday, right, not the time to be a hero. If we're looking to trade the markets, selling put options and benefiting from the volatility, one of my favorite ways of taking advantage of names that are moving to the downside rather than saying, this is the bottom, this is the bottom, this is the bottom. That can be said on the SPY or a number of names that we just covered in terms of Mag 7, right? Longer term, buying here for the longer term portfolio is obviously very attractive. We know that. Market breadth is weak, VIX is high, peak of conflicts, peak of narratives. We know it's good to be buying all throughout this dip with our average paychecks, right? I'm not hoarding cash. When I get cash and I deploy it in the markets, there's still so many phenomenal opportunities for long-term compounding companies. But if we're trading, and I know a lot of you guys have two portfolios such as me, right? A long-term portfolio, buy and hold, and then you have a trading account. If you're trading, what I'm doing, selling puts under the market on some of my favorite companies on big red days such as today, with VIX expansion such as today. If I'm trading directionally, well, you got to play the names that have beautiful weekly uptrends and high levels of momentum, right? It's the only way to benefit from the markets. And we've been talking about these themes all year so far, whether it's robotics and drones, whether it's the space themes, whether it's the photonics theme, right? Or semiconductor connectivity plays, whether it's some of the energy plays. These are where all the momentum is right now. So you have to adjust, right? It's not the same landscape as it was last year where you could just buy Robinhood at any price and it goes up. SOFI at any price and it just goes up. even Palantir at any price, and it just goes up, although the price action is looking better. I feel that a lot of people are left in last year's regime, trying to play last year's winners while kind of not really giving much thought to the names that have been working very well since 2026. So now as we do the biggest gainers and losers, we'll once again be focused on how can we extract trading profits from some of these biggest winners, because I'm pretty sure a lot of you guys, I mean, maybe you're holding them for like the next 12 to 18 months, right? But a lot of you guys probably are not going to be adding the names that I'm about to cover in the long-term portfolios to hold them for the next 5 to 10 years, right? No, but if we want to swing trade, we got to swing trade with momentum. That's just the name of the game in this market environment. There's always a bull market somewhere, and we know it's not a large cap growth right now, and a lot of small cap names are deeply out of favor, right? Deeply out of favor. However, there are a lot of names that are deeply in favor, and that's what we'll talk about right now. Okay, so let's tackle some of the biggest gainers of the day, guys. Photonics again, right? So we constantly talk about this one. Beautiful daily uptrend recapture by the bulls on light here, and AAOI is trying its best to recapture some of the price action structure that it lost as well. 4-hour uptrend as well. So if we're looking to play these names, guys, it's very simple, right? They're offering you clear stop loss areas if you're swing trading. Below the recent 4-hour higher lows, if we're swing trading, I rarely bring up these time frames, or on the break, such as yesterday, right? I don't think we talked about this one yesterday, but the daily uptrends, right? So follow these daily uptrends higher. Yes, these companies are super overbought, but that's where all the money is coming into right now. The last best entries were around the 12 EMA for longer duration swings, but if we're looking to do these on a more short-term basis, we can follow the price action higher if we are momentum trading, so keep that in mind on light. On AAOI, same concept, right? They just gave you a new 4-hour uptrend. It's very volatile, so if we're swing trading this one, clear stop loss area below 87.64, and we're just carrying this one higher. That being said, it is on the weekly, you can see here, right? There's super overbought levels. So these are good for momentum trades, for swing trades. It's where all the money is right now. Charts that have a bit better structure right now. Fabrinet, look at Fabrinet, right? Offering you a very nice stop loss level below today's low, and you're going for the expansion trades higher. Daily uptrend chart, beautiful. Weekly uptrend chart, beautiful. Same thing can be said about a name like Coherent, right? Coherent, they're trying to reset right here a bit of the price action structure, and right now you got the big engulfing move. So they're offering you clearly defined levels, whether you're trading on the 4-hour time frame basis. Look at these moves, right? Solid pushes. Look at this weekly chart. It is gorgeous right now. We're not saying these names for long-term investments, but if we're looking to play the themes and the momentum, right? Well, we can't be playing something like a SOFI if you're looking for momentum. It's just, oh, the bottom is here, the bottom is there, the bottom is there, the bottom is there. How's that working out, right? Not very well. But if you're playing some of these names with high velocity and high momentum where the money clearly is right now, you're probably having a much better time to structure shorter form swing trades. Maybe not with call options, but spreads and shares with clearly defined stop loss levels, because you know that you're kind of, eventually these will go for the same as other ones, right? Look at the monthlies. They're super extended right now. And the last thing you want to do is be trapped on a very large consolidation phase. So if you're trading these, trade this with a stop loss, and you should be trading on the smaller form time frames, okay? So keep that in mind. Bloom Energy, same concept, right? So Bloom Energy, very solid price action. Throughout this entire conflict and whatnot, Bloom Energy has barely moved. It's looking very strong right now. The bulls are building a very nice base of support. And look at this weekly candle. They're trying to go for the push higher. So once again, Bloom Energy, probably a very nice trade here for momentum to the upside. Yes, on the monthly time frame is extended, but we're not saying for any, if we're looking for longer term buys, for longer term swing trades, that's when you guys see me reference the 12 EMAs and a lot of the longer term moving averages like we talk about on Microsoft or Amazon or things of that nature, right? But this is for those of you that are trading out there. You're looking for very attractive setups to the upside, okay? So keep that in mind. We can talk about other ones, other themes, right? Such as the energy themes right now, battery storage and energy, right? T Energy, one of my favorite solar plays right now. The bulls have done a great job in trying to reclaim here the daily uptrend over the past few weeks. The weekly is not looking too bad. The company has not declared earnings just yet. Still one of my favorite small cap names in the market, but also shout out to some of these other names, right? FLNC, this one is a longer duration play for me. No momentum in the chart right now, at least not as much as it was. So this one, longer duration, and ENS, this one could be interesting in the near-term future. Your market leader for battery storage, MACD, beautiful cross, daily, beautiful uptrend, reclaiming a lot of the moving averages. They hadn't lost them in a while. Consolidated, now reclaiming them. They're offering you a very decent stop loss level for possible entries and to take this weekly swing trade possibly higher. These charts are looking all very, very solid, right? The price action is very good. So what I'm trying to tell you guys right now at the end of this video is, for those of you trading the markets, for those of you long-term investing, obviously, guys, right? You guys know exactly what I'm buying for my long-term portfolio, adding positions in Melly, adding positions in Booking.com, adding to positions in the Mag 7, adding to positions in Visa, MasterCard, because these are all names that myself personally, I'll be holding probably for the next like 5 years plus, 10 years plus, adding to names like ISRG in my long-term portfolios. We know that, right? Adding to high-quality companies like SPGI that are at super low levels. Yes. But we're not trading those names. They have no momentum right now. We're adding to the long terms. I'm appealing right now to the cohort of my audience that are looking for where are the hottest aspects in the market right now to try and trade, right? So please keep all of that in mind. Rocket Lab, also a very solid chart right now, holding up the price action very well. Space Trade and Themes, very nice. Planet Labs, they just had earnings today. They're up about 11% in the after hours right now. Let me just turn it back on for you guys. Big breakout right now above the highs, right? So all this area of price action 26, they're now popping above the highs right now. Very decent chart, right? They held structure very well, moving substantially higher. ASTS, also decent area that we can trade upon, right? Beautiful higher lows being set by the bulls right now. You're looking for the expansion. In my opinion, not as pretty of a chart as Rocket Lab, but the space theme, definitely something to keep in mind and pay attention to, right? Speaking about some other names, such as Kraken Robotics, right? Kraken Robotics, some of the military defense names. This one, just kind of grinding higher. Kraken Robotics, I'd be interested in repositioning down here. If you get into maybe a 6 location, I closed my position yesterday, but I'll be looking to play the swings on this one. It's been respecting this 12 EMA for a very long time. So if you do pull back a little bit here into prior resistance structure support, and now a new higher low, we know a lot of money is being poured into some of these military companies. KTOS, same concept. KTOS holding well right now, trying to curl, looking pretty good, trying to go for the daily uptrend right now, trying to close above the daily EMAs, and beautiful areas of support structure after an elongated phase of consolidation. Watch for some of these names, right? These are some of the names that are showing very nice price action characteristics. The monthlies still in beautiful uptrends, still very thematic names that you should be paying attention to, right? So military and drones, same thing can be said for names like Ondas, right? Ondas holding up the price action in a fairly good way. They have earnings next week, so pay attention to it, but clear area of support structure the bull's been forming for a long time right now. The weekly also looks good. The monthly also looks good. So selling put options below these lows, right? Or getting into these trades with clearly defined stop losses. Still some of the names that have the best momentum in the market right now. OSS had their earnings just the other day. This chart looks great. You guys know that I'm in from about the $8 range, still holding, looking for the possible re-expansion on OSS. So these are the names, guys, that we have to be paying attention to, right? And let alone the memory names, okay? So Micron had their earnings yesterday. They had the gap fill. The 4-hour bulls have played good defense around these previous all-time high levels. Micron, great momentum, right? Daily uptrend, setting the higher lows after earnings today. You're looking for some possible follow through. We covered their earnings yesterday. SanDisk already getting the follow through. EWY, some of the Korean names, easy stop loss territory, guys, 123. And you're looking for the re-expansion of SK Hynix and Samsung. Yes, there are other companies in this ETF as well, but this is the easiest way to play SK Hynix and Samsung if you are trying to play the memory narrative, because it's like 46% of this entire ETF, right? So these are some of the names and some of the themes that have been working really, really well recently, okay? Instead of trying to play reversal themes like some of the airlines, which is not too bad, right? Instead of playing some of the restaurant names like Cheesecake Factory or Chipotle or other things of that name, you know they're not in favor. Nobody's talking about them. The institutional money is not flowing to these names. Their sectors are out of favor. If you are trading the markets and you're looking for directional trades, because there's 2 ways to do it, and that's what I'm doing. I'm trading these favorable sectors for directional bets, but I'm also on the flip side selling put options on my favorite companies of legacy, my favorite legacy companies such as Mag 7, right? The names that are down in downtrends like Amazon and whatnot, or like AMD that is struggling right now, or like NVIDIA that are struggling, great. I'm playing the volatility on these, right? Because I know they're at good levels, good valuations. I'm selling put options below the market, but I'm not swing trading these names because there's no momentum. There's no sustained uptrends right now in them. If you're trading directionally, at least, you want to play the ones that have good momentum, right? Digital Ocean this one's gone at this point, right? I wouldn't chase this one, or names like Fastly. We didn't bring them up recently, right? But you got to kind of find the areas of the market that are displaying good momentum right now. And NBIS, we'll talk about the neo clouds, right? NBIS versus IREN versus all the other ones, right? There is one name that is clearly the market winner. The market has chosen its winner right now. And the winner indeed is NBIS. Weekly uptrend, big move above, right? So NBIS, you guys know that I'm in this one. CoreWeave, still out of favor. IREN, still out of favor. Although holding support nicely, CIFR, still out of favor. APLD, still out of favor. Not saying these ones can't catch up, but the market leader right now, at least for momentum purposes, is indeed NBIS. So in the event we get consolidation into this range, decent area to be restructuring some trades. As of right now, the other ones are kind of being left a little bit behind, right? CoreWeave, unable to establish some solid price action. IREN, unable to establish some solid price action, although a lot of them, IREN, CIFR, just looking at the charts, they're holding, right? If I put another little box right here, they're holding structure really nicely. They're giving you clearly defined stop loss areas if you're looking to buy these dips and try to go for the future upswing on these. But as of right now, the market has clearly chosen its winner so far, right? NBIS was kind of locked in before, and now with those big deals that it's got recently, especially since Meta, this is the only one that's breaking out substantially the all-time highs. So I don't want to hear anybody complaining about Oracle, right? The price action is just not there. It's just not there, right? So if we're playing some of these names and some of these themes, you may as well identify the market leaders across all of them and stick to them if you are playing directionally, and focus on key areas of price action structure to establish entry levels, stop loss levels, and more. That's everything I had for you guys for the end of the video in terms of the biggest gainers and losers. I know I didn't talk about the losers, but the losers, like, we've been over them so many times so far. You guys know which sectors are out of favor. You guys know which sectors are in favor right now. No need for me to talk about them again. We'll talk about some more of them tomorrow. Like, there's some nice opportunities, man, across software. Like Reddit is cheap, but there's no momentum here, right? AppLovin is super cheap. So these are nice areas to be building positions in if you're looking for the longer dated swing trades when these companies eventually come back, but not the best names for short-term momentum, right? So I still am a big fan of AppLovin for valuation alone. I'm still a big fan of Reddit in terms of valuation alone right now, right? But the market is just not letting them expand too well recently, as they're part of a broader sector that's out of favor right now, which is, quite frankly, software, right? Software had a big lift, but no follow through as of just yet. So these trades will require a little bit more patience than other trades, right? So there's like medium style trades, which are the software recovery trades, but there's also immediate names that we can be playing on a recurring basis here that are displaying much more favorable price action. So we'll talk more about more gainers and losers, but I think you guys that have been recurring viewers on the channel, you guys know where the money is flowing to. You guys know the key themes and sectors that we should be focusing on, right? Drones, defense corporations, and robotics, very easy. Some of the energy names and renewables, very easy to find some good deals right there. Moving on a bit further, some of the connectivity plays for within data centers, whether power solutions or photonics, also very easy narratives to be playing right now. All the other stuff still relatively out of favor, so please keep that in mind. And I'll give you another kind of free one right now, right? Some of the data center construction names like LGN, beautiful chart right there. Fixed Comfort System, very beautiful chart right there, looking for some expansion, right? If we're looking for momentum, just focus on the names that have very nice weekly uptrends, great monthly momentum right now, but at least be trading them with a stop loss, because these can also have some phenomenal reversals at a certain point. You don't want to get caught in a larger phase of monthly reversal. It's the same thing as gold, right? It works until it doesn't. And you just don't want to stick around for the longer phase of consolidation if that is what the market chooses to do to those sectors at any given moment. So hopefully today there was a little bit of everything for everyone, right? We talked about long-term portfolio positions and how we should be continuously accumulating them and how we can position in leap call contracts with those. We talked about which sectors are also in favor for a lot of short-term swing term capabilities, right? And kind of getting away from last year's winners and focusing on this year's winners instead, which we've been talking about on the channel for the past 2 months at this point in time, right? So there is something for everybody in this market. I still truly believe that right now. So Just keep all that in mind. And that's all I had for you guys in tonight's video. Hopefully you guys enjoyed. If you did enjoy, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. I would love to have you back. They both really help me out. You know, the videos are very long, so the algorithm doesn't really favor the video. So I really appreciate all the likes and the subscribes. And even when you guys leave comments down below, I'll do my best to answer all comments today through tomorrow. So if you have any questions, any feedback, any plays that you guys are possibly looking into that go in line with some of the themes that I've mentioned as well, feel free to drop them down in the comment section and share what you're looking at as well. And last but not least, guys, I know the markets are very challenging right now. Identifying opportunities is not as easy, perhaps, as last year because the indexes have been slightly down. And as a result, guys, if you are tired of trading and investing in the markets all by yourself, you may consider joining us in our trading and investing community in our Discord, where we talk about all these different ways of playing the market on a daily basis. Of course, in the Discord, you get access to all my trades in real time, no matter what I'm doing, whether I'm playing the wheel strategy, playing some key themes for some short duration swing trades, whether I'm building leap call positions in certain companies, or what I'm adding to my long-term portfolios. You guys get all of those alerts in real time. You also get access to our private morning live streams Monday to Friday. Every morning at the open, I stream for 2-3 hours. We trade the markets live, talk about all the best opportunities in the market, and then I take all your guys' questions on your stocks, your options, your long-term portfolios, and at least there I can help you with the charts, the fundamental analysis, right? Technical analysis, and everything in between. So that's the best area to ask me about certain stocks or certain option plays or things of that nature. Have a lot of fun in the live streams and very constructive environment, obviously, guys. And at the same time, of course, you get access to all our chat rooms. You can ask me questions all throughout the day, very fast to answer. You get access to 15 hours of private videos that I'll never put on YouTube. Things like how I do my technical analysis, fundamental analysis, various different trading strategies, how to build a trading portfolio, long-term portfolio, so much great content in that educational section. And last but not least, you get access to all my charts whenever you see support resistance levels like this, or you see fundamental breakdowns like this, and you just don't want to do them on your own. Well, you can just literally copy paste all my charts. Whatever you see on my charts, they just become your own. You can copy paste all of my watch lists, all of my charts. It takes like 15, 20 seconds, and they all become yours. And we would love to have you in the Discord. We have a lot of fun in there every day, talking about the markets, identifying these key themes, identifying the winners and losers on a daily basis. I try to share as much as I can on the YouTube, but obviously we go way, way, way more deep in the Discord. So if you guys are looking to step it up a level and come join us in the community, we would love to have you. The link to join us is down below in the video description. Hopefully I get to see a few more of you guys in there soon. And if not, I will see all of you guys right back here on the channel. Take care. Have a good day in the markets. I will see you on Saturday when we recap the entire week. That's it for me. Peace.